Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today's Thursday, September 24th, 2009. We begin with the biggest mover in today's session, the UK pound. The pound-dollar pair was sold off strongly overnight, continuing its down move following a counter-rally retracement of 50% we highlighted yesterday. The pair broke below its short-term level of support and proceeded to slide almost 360 pips before finding support at 1.6020. The catalyst was news that the Bank of England had requested a meeting with economists for next week, where the subjects would range from preventing a further decline in the pound, the quantitative easing program more generally, and cutting the interest paid to banks for deposits left with the central bank. Today's move also punctured a much longer support level. The euro-pound pair, following its own 23.6% retracement of its recent up move, shot up in today's trading. The pair rose 160 pips to set an intraday high near 0.9155. That is the highest the pair has been in nearly 5 months. The pound-yen pair, meanwhile, broke through its support from this week near 148.40, while en route to plunging 300 pips from today's open. That is the strongest the yen has been against the pound since May 18th. In addition to the weakness in the pound, the yen was stronger overnight as Japanese investors came back from holiday and were repatriating cash ahead of the half-a-year fiscal end. The euro and other risk-sensitive currencies surrendered their overnight gains against the dollar after stocks in the U.S. reversed direction on an unexpected drop in August home sales in the U.S. U.S. stocks opened higher on a better jobs report, which coincided with the euro-dollar pair testing its high for the day near 1.48. However, after the 10 a.m. release of the housing data, the Greenback paired its earlier losses and set a new intraday low below 1.4630 following a 170 pip slide. In the U.S., fundamental news showed jobless claims fell 21,000 to 530,000, a figure that surprised forecasts and shows the level of jobless claims continuing to decrease since peaking in March. The figure for last week is the lowest number of initial claims in nearly 2 months. The number of total continuing claims decreased as well. The data could imply that the job market is starting to stabilize, as recent gains in home building and manufacturing reinforce forecasts that economic growth will resume in the third quarter. As we mentioned, the better-than-expected jobs report was overshadowed by a weak existing home sales reading. August saw existing home sales drop 2.7% to an annual rate of 5.10 million units. That figure undercut expectations and increased risk aversion in the currency markets. The data sends a signal that the housing rebound cannot be taken for granted, especially as we approach the end of the first-time buyer tax credit. The dollar-yen pair gave back its gains from yesterday in overnight trading, with the pair setting a new low for the week around the European Open. With U.S. stocks unsettled by the housing news, the Greenback gained. We have been highlighting how the Greenback and yen have changed roles in terms of their dynamics in carry trade. With the dollar becoming the premier funding currency for carry trade, it strengthens now when there is risk aversion and falls when there is risk appetite. The U.S. dollar-Canadian dollar pair saw a big jump today, surging 230 pips in the wake of the weak U.S. housing report. That put the pair at a 3-week high when today's rally stalled at 1.0945. Oil prices were down 3.8% today to $66.30 a barrel, which was another reason for the decline in the loonie. The Aussie-US dollar pair, which had been climbing overnight to come close to retesting its highs from yesterday, also saw a strong decline in New York morning trading. The Aussie set a new intraday low near 0.8690, which adhered to an upward sloping line of support. From there, the Aussie made a small counter rally. Except for 2 peaks above resistance at 0.8770 in yesterday's trading, the pair is forming what seems to be an ascending triangle pattern, a sign of consolidation. Tonight, New Zealand will post its trade balance, and Japan releases its corporate service price index. Overnight, the Eurozone will post data on money supply and private lending. Tomorrow, the U.S. ends the week with 3 releases: durable goods orders, new home sales, and the final version for September's UMich consumer confidence. And that wraps up today's edition of our broadcast. Thank you for watching here at CMSFX.com, and happy trading.